Hello, ladies and gentlemen. It's Modern Investing. My name is Sasha Starr, and I would like to introduce my esteemed colleagues and guests. We'll start with Peter Bennett, who is a graduate from New York University and Wall Street professional, and Nick Paliveda is founder of this network. Welcome to the show, Nick. How are you doing today?
Not too good because my stocks just took a big hammering today.
Did it?
I only check it one. Well, I invested in Nvidia, and Nvidia went.
Oh,
Not only in stocks, just Nvidia, and well, some of them.
I love
Nvidia.
But see, Nick, Nvidia I always like and recommend, but not to buy stock. I never said buy stock.
Oops.
I always sell options, sell puts. Far out of the money, say sell August or even December or something, and just forget about it. Collect tons of premium. You are sitting on tens of thousands of dollars.
Listen, Sasha, I've become a long-term investor now in Nvidia.
Oh yes.
You know what, Nick? I think it's an okay company, but I think you're going to have to hold it a long time. You know,
I don't know. You know, the thing is,
because it's so inflated.
Well, that's the problem, is the price-earnings ratio. I liked everything about it except the P ratio was high.
Right, exactly.
I tend to stay away from high P ratios.
In stocks, Nvidia P/E ratio.
Sasha keeps talking about it for a year now, so I said, okay, I'll start investing in Nvidia. And of course,
not investing. It's a trading situation on options, not on the stock of Nvidia.
Right,
it's very volatile stock. It was $300 and some $40-50 just 2 months ago.
That's
today,
what I'm saying. Right.
$230, and it could be $119. And if the market will be as wobbly as it is now, and you know why the market is wobbly? Because the West and United States did not give Putin anything on his ultimatum. He was asking a few things here and there. Give it to him, and your market will fly. Oil will be reasonable, so on. Now it's inflation.
Wait. I have to say a few things. One, Nick, you forgot that our show is about dividend stocks and options, right? That's what it's about.
Correct.
That's how we make money.
Here it is.
Pretty steadily. Exactly.
I violated the rule.
But
preservation of capital. That's all.
But I don't think you listen. Ukraine is just throwing a little more fire on an energy crisis that's going to happen anyway. You know, we are in the market. I was watching CNBC, you know, just getting a few pointers for the show, whatever, seeing what they were saying. And they're saying, well, it's a healthy correction. And they're saying, you know, oh, well, Goldman is saying that the oil stocks are predict price for $30 oil, but it's at 90 now, but 90 is not sustainable. Wrong.
Right.
90 is the beginning of this problem. Brent is at 97 for April now. But I've been saying for a year now, look at energy, and it's been the place to be. My portfolio, by the way, I'm not down on almost anything. The only place I lost, but I'm net break even or, anyway, for the last 3 months, even though the S&P is down 10% and NASDAQ is down from something like 400 to 337. That's a big drop in 3 months. Yes, and that's part of Nvidia's problem too, by the way. But even Google and Amazon and, Google, I'm not in Amazon, I am. But, through options again. But, they've been all driving down. But what it looks like to me for the last year, and it looks like right now, is we're entering a new era. And the new era is inflation and energy. And that's it. If you don't have energy stocks, you are going to be hurting in the future. You need a lot of energy because I think oil could easily go to $150, $200 a barrel. I've been saying, I gave like 10 different reasons why, but the oil companies are only putting in 40% of what they need even to sustain the current levels. And I have articles about, the demand is up and people aren't even flying yet. The oil, this is the beginning of an energy crisis and an inflation crisis. And the Fed's going to have to keep raising interest rates. By the way, the 2 and 10-year curve is now at 0.38% spread. That spread was 0.65 maybe 2 or 3 months ago, and it was 1.5. And as that curve goes to flat, what happens? Recession. But finance companies don't want to lend anymore because we're not making any money. So first of all, I mean, I was going to get into this in a little later, but it's only to me energy and everything else. And the only other place I'm even in now is consumer staples because they tend to do okay in energy. And I'm only, in there to a point. Equity REITs, you have to be extremely selective. And that has at least a history of, success in even inflation. And then tech, if you're in the right ones, you need major tech. But what I'm avoiding is everything financial, everything consumer discretionary, everything in Europe, which is extremely dependent on energy, and they've dug themselves into a hole that's unbelievable. Like Germany stopped doing nuclear power. It's like, what are you doing? Who are they going to get this energy from? And especially on top of this Ukraine problem. But
and they stopped coal as well.
Yeah. There, people were freezing in Europe this year because, we're going to go to alternative energy. No, it doesn't happen overnight. You have to, plan it well. Instead, it's all this push. I wouldn't touch Japan in a million years because they will import all their energy. It's international. I mean, it's just, I'm only basically U.S. energy, consumer staples, equity REITs. Everything else is going to be a disaster. This is probably the beginning of years and years of more and more inflation, energy, labor costs going up. Every store, that's the only point I'm going to bring out, the plus is Omicron is now 99.9% of all new cases. So COVID, I'm thinking, is going to be gone in 3 months. The supply chain, they'll ultimately resolve it. The stuff will go through. But labor inflation, rents, and every store you go to, everywhere I go, and I think everybody, you two have experienced this, and everybody in the country is, you go to a store, it's like you go to Wendy's, it's like, it's a half-hour wait because we can't get enough people. And then you go to, Disney, and it's like, we can't staff all our restaurants. So everywhere you go, there's labor shortages. And people are saying, I can quit my job because I can just go to another job. So all the pressure is now on the companies. So what are they going to have to do? Raise wages. There's going to be competition for wages. So if you add that on top of huge energy increases potentially, you have to be very careful where you are in the market, not just this month, last month, but going forward for years.
Yeah, let's see where else I got hammered besides Nvidia. IBM, I took
I told you not IBM either.
Well, I might actually buy some more because they pay a 5% dividend now. The stock price keeps going up.
Suncor Energy pays 5%, but I think that's more promising than IBM.
And Antero Midstream. Why did Antero Midstream? All the rest of them were up. Antero Midstream, I don't know why it's down, because that's like in the energy sector.
Yeah, it's natural gas. I'm only 1/3% in AM. It's not my biggest belief, but I could tell you why they came out with a report. They're not funding their dividend this year. Right. But if everything goes according to the plan in 23 and 24 and 25, then they've got the cash flow to more than cover their dividend. I still like it, but I had reduced it to 0.5%. It's not or a little less even, but it's not it's not my favorite. It's because there's not necessarily growth. All I want, I always tell this joke, but it's not really that funny. But I always say all I want is a high dividend, safety, and growth.
And speaking of which, I ventured into Alibaba, but I did not really lose too much on that. But that was my venture into Chinese, and of course they didn't get hammered like Nvidia did, but they're not doing well either.
It's getting there. Sure I think you're right about Alibaba.
Do you think they have upside potential?
I would like to make case though, not only for Alibaba but Nvidia as well and other high tech stocks.
Well, I'm a long-term investor now.
Yeah, absolutely. Viva long-term investors.
I'm a long-term investor in these. It's called it's really Baba, not Alibaba, but boy.
Oh, the symbol is Baba. But,
yeah, symbol is Baba. Yeah.
Yeah, I do options on Baba. Not right now. Right now, I have no position, but I think I'm considering that. What I would say is that this situation with energy, inflation, is not something what happened yesterday, and we were, oh my God, what's happened? We didn't know about it, or so on.
Mhm.
It's been around now for some time, and
Yeah.
energy kept going higher in price, and inflation is getting there, and so on. So what if it's already in price of energy stocks and high
I
tech?
don't think it is.
That's a question. Right now, I notice there is some stagnation in energy stocks.
Right.
And if that's the case, that energy, especially now, the situation with Ukraine, Russia, and all that stuff, you're right, the stock should have been already well over $100 in a barrel, and it's not there.
Yeah.
So something, what I feel may happen is that there will be some correction in energy stock, maybe shortly, maybe 10%, 15, maybe not much there. Now, remember, there is the end of the month. February was horrible month for a stock market. January was not much better. So
Mhm.
here comes something what we call a window dressing, because all the funds, mutual funds, pension funds, they have to report, and February has only 28 days. So
Mhm.
how you report that? Oh, my fund lost 20%. Oh, my fund did much better. I lost only 18%. That's not going to play well with investors.
No,
No,
it's
you
not.
No.
must work. Where are
It's
your
2008.
bonuses? Come on, guys. Back to work. Oh, back to work. So what's it going to buy? Microsoft, Nvidia, Apple, and all our old friends, the high-tech stocks. Without
It
high-tech
could
stocks,
be.
there is no rally on the market. There is nothing. And I noticed already that market is slowly trying to rally. Sometimes future opens higher, but then they're dying.
Yeah, they're down.
Sometimes they keep the stock down all day. In the last half an hour, they bring them up. So something tells me that there will be some kind of a rally, but don't be a sucker and buy into the rally, because the bloodbath, of course, is coming after that rally. What will happen?
Gotcha.
Then there will be a real bloodbath a few weeks later. What means bloodbath? That means a panic selling by retail investors. They
Mhm.
have to be spooked to hell. They have to sell everything, margin
Right.
selling to protect your last pennies that you still have left. There will be a panic selling, and the market will lose 25, maybe 30%
Right.
of its
Wow.
value.
That's
And
quite a
what?
prediction.
Yeah, oh yeah, it will be
And
severe.
and that by the way is the real problem, Sasha. It's not
Yeah.
like an individual
And when do
stock.
you think that will happen, Sasha?
That's the problem. When?
Well, right now I'm expecting a rally. I don't know, probably 5, maybe even 10%. And then if you have option strategy, then all that is not significant. But if you have
No.
stocks like Nick, for example, I would sell into the rally. The Nvidia probably should run maybe to I don't know, probably 260, maybe even 270 a share in this rally.
Yeah, then I make money. I'm
You
back
will
in
make
again.
money. Yep,
Yeah.
you will sell money.
Well, see, that was the logic of buying it. They were sitting around 330, and then they dropped. And we've been talking about it for a year, and I kept watching it going up. I didn't want to buy on the high, so I bought on the low,
Another
and
strategy.
that went lower.
No,
So,
intrinsically, see, and Nvidia is very good stock anyway. So if
yeah,
you
that's what I figured. So
have it,
I'm not worried about
so
it.
what I would do in a rally, I would sell December calls,
Yeah.
just covered calls,
Okay.
because the premiums on Nvidia are so great that you will, for each call that you will sell, you will have tons of money. So
Yeah.
then you will have a cushion, a protection on Nvidia, down to, even if it will go to 220, you will be protected. You will not lose any money.
Yeah. Right.
So actually, when you bought Nvidia, uh, I would have I would have sold covered calls right away
Yeah.
once you bought it, because you see, a market is very unstable right now, and
Right.
depends what's happened with this political situation with Ukraine and all that stuff. I can see inflation, the interest rates coming up in March or so on. But even, you know what, for some reason I believe that it's already priced into the market.
See, I don't at all because I think the market's missing the whole energy picture and inflation picture. And I think that it's going to be it has been a gradual wake up, over a year now. And, but it's very predictable. I mean, look, if you don't have the energy companies investing enough money in oil and production, it isn't like it disappears overnight. But if they're putting in 40% too little capex, it takes a while to unwind. It's a very slow and cyclical business. But this is a long-term trend. And even within the 60% of capex that they're putting in, maybe it's about 10%, I forgot, about going into decarbonization. So that's not even a go. That's like long-term solar.
I agree on everything what you're telling us.
But here's the thing then. So if that's the case, and if it's going to be a very painful and long energy rise and inflation rise in labor, the markets are going to be hurting for a long time because it's not going to happen suddenly, but there might be panics and there probably will be.
See, that's the macro view, Peter, but then you got to go the tactical view. Which stocks do you buy?
Well, I already have that. My stocks have gone down.
I like MPLX, but the problem is I'm buying MPLX on the high. I just don't want to buy it on the high.
Yeah, but personally, I think MPLX should be at 40 today.
Really?
I sold a little at 33. I just bought it back at 31. It's up 1.6% today. Yeah, really? Because if energy prices go up, it's very good for energy for the MLPs. And meanwhile, today I bought it a little bit more at 9% dividend. So, you know what? If I hold that stock, again, it's like buying a dry cleaner. I'm not planning on selling. I'm hoping.
So you're planning on being on a long-term hold, even if you buy
if I get 9%, I can hold forever. Unless my only fear is that Biden does something totally insane, but I don't think he could do it anymore, especially with Ukraine, and says, "Oh, we're not going to export oil, to other countries, like liquefied natural gas." But the problem with that is, one, that would destroy our allies and literally freeze people in Europe now. And two, I don't think he could do it. There was a movement for that briefly. Then the Democrats sent a letter to him. Well, we want you to prevent new LNG. So he could do that and say no more LNG plants, for the future. But he can't just turn it off. And the thing I read is the oil energy, other than this, and the energy industry was arguing to, by the way, if you do that, we're going to lose a lot of money and the price is just going to still go up. So it's not going to work. But other than Biden, and I'm less and less afraid of him doing this, especially with the politics, then other than that, it's like this company is going to be buying back shares. It's, and the other companies, USAC, had a 5%.
USAC looked to me 2 weeks ago like Nvidia does today, but USAC, I'm back in the green now. No, I'm back in the green
because it had a good report. It says
I'm back in the green on
it won't cover its cash flow, which is why I'm 5%, but it's solid. So if I'm collecting 12% on USAC, which is a 5% interest, again, I'm a little more nervous about them dropping it.
The only thing I'm mad about is I had an opportunity to buy more USAC when it was on the down. Which is what I should have done. I mean, it's like playing a chess game, Sasha, but you can always say you should have done something and you didn't. You can never be 100% correct. And USAC was my dog. It was my Nvidia 2 weeks ago. And I'm going, why did I buy all that USAC? Then I said, I should sell it. It's a dog. It's going down, blah, blah, blah. But I couldn't sell it because it had that high dividend. Now it's back in the green again.
Well, remember to add your dividends in, Nick. If you hold a stock, if it goes down 10%, you might say, "Oh no, I'm down 10." But if you add the dividends back in, then you're
back to even again. Yeah.
By the way,
that was the only other problem I had with Nvidia. It doesn't pay a dividend. It's like 0.63.
Yeah,
I'm going wow.
This is why I like Nvidia, but I don't like the stock of Nvidia. I like Nvidia.
Well, KLAC, which is my favorite, and it is down. That's why I'm not up a ton, because KLAC and Amazon are the two tech, and Microsoft are the only three tech stocks I like. I don't like anything else. Because I think they're invulnerable, basically, and the growth and everything. I talked about Amazon last week. I won't get into it in this segment, but
Amazon's in everybody's portfolio because if you own a mutual fund, you own Amazon. So I just don't even.
Yeah, at least KLAC has a 1% dividend that's been growing, by the way. So at least you have some protection there too. But I sold Chevron. I originally said I was up to 1%. and I'll tell you why. It's interesting. But then I advocated buying it, and it did go up quite a bit from there. And then I said I went down to a 3%. Then I sold a third at a slight loss, but I made money overall. But here's the problem with Chevron, and I've always been reluctant on the Exxons and the Chevrons, because I looked at their history the last few years, and they've been making more and more money in the U.S. But guess what? Internationally, they've been making less and less money since 2018.
Yeah.
Substantial reductions in where they're making money. Because look, if you're an international, where are you going to get your energy in the future? I mean, there's not a lot of sources. You're drying up some sources, and so they basically more or less broke even on revenues for the last few years, because the U.S. keeps going up and the international goes down. I said, this is not a company I'm going to hold at 4% dividend, because even if it grows, it's going to take a long time, and maybe in 20 years, 10 years even, oil won't be as big a thing. I mean, probably 20 years. Eventually natural gas will take it over, and it's not even pure natural gas like the other places, or mostly natural gas like MPLX, like USAC creates the motors. So it's like, I'm going to stay with my winners. So, the big winners. And so Chevron I dumped, but again, it's all about energy. Everything else is acting as if energy or something's wrong. And I think the thing that's wrong is inflation and energy.
Yeah.
But I wouldn't put together energy and energy stocks. Energy is rising. We all know that. Inflation is there. Energy stocks, I feel that there is a distribution stage of energy stocks. With all the knowledge that we have about where energy goes, political situation, or so on, the energy stocks must just tear apart everything, but they're not. They're getting out of steam, especially oil stocks. And even I'm watching few of them, like Suncor Energy, Canadian company, gas stations, anything what you want. They got stuck. They went to around like $30 or so. They cannot get any higher. And they pay dividends, and this good company, well run, cannot go any higher. So is Chevron, so is many Exxon, and so on. All of them are on of steam.
They are stuck.
To me, there is a distribution. They had a good run, but right now, and
you know what?
Retail investors wouldn't sell them. I think it's a.
You know what, Sasha? You know what? Maybe it says something. If everything else is going down, energy stocks are flat. Then first of all, again, I'm buying businesses, I'm buying dividends, or I'm selling options. So there's money in all of that. But if energy stocks like a Chevron, which I just got out of, is flat and it's been going down lately, it went up a little, down a little. But if it's flat, maybe that still says something, because a lot of S&P down maybe 10%, growth stocks and the tech down 20-30%, so I mean, flat is not so bad in this market, and it could be just people, mutual funds selling stocks, people pulling out of the market, and it's holding its own. So maybe it says that that's not a bad place to be in the long run. Again, you have to be very selective. I think this is the most important thing for decades now. We've been like, you could pick any stock, make money. You could pick any almost.
Sure, I agree.
Yeah, I mean, because the Fed was bringing rates down to zero, so it's like, okay, where am I going to put my cash? Okay, I'll put it in stocks.
It's going to be tougher if the Fed announces.
It's going to be incredibly. The brokerage firms are saying, it's going to be much less, 2 to 5%, whatever the predictions are year on year. And if the market's going 2 to 5, you better have the right stocks, because that means a lot of them are going down. When it was 10% or 20%, whatever, depending on the market you're in, then it's like, I can't lose. So
they just flooded the market with tons of cash. I mean, it wasn't rocket science. The minute they start trillions of dollars, what? Yeah, well, they stopped the money supply. I mean, that's the real problem.
Well, they have to.
Yeah, so now that
because all of a sudden it's having effects. It's like people,
because of
housing
inflation
prices are through the roof, 25%. So mortgage rates just hit 4% this week.
So did they?
Is this the reason I'm doing well on this stocks I mentioned several times before, the tobacco stocks like
British American,
which is in a green, going higher. And I started to think about something in this stocks, the sin stock, tobacco stocks. See, the problem is that, for example, take cigarettes, Marlboro. How many companies in the world can sell Marlboro? It's just Altria Group, Philip Morris. They are selling Marlboro stock, Philip Morris. And the same thing happened with this British American tobacco. They have some properties which are unique, which are bad for your health, by the way.
Oh yeah.
So people believe it is. And they have no competition.
Well, see,
Which raises
Sasha, from what I understand, it's a declining industry, but they have a loyal following. Would that be correct?
Yeah.
Okay. In other words,
Yeah.
the people are
You
addicted.
know,
So
I
they're
think
loyal
they found a
followers.
new angle. They have vaping products. They have so many things
Right.
going on that, yeah, I agree that it's a declining industry, but because there are less percentage of people smoking, but overall there are many more smokers because of the
Well, a point
increase
in
in
the question
taste.
about that, Sasha. A point in the question. One, it is consumer staples, which is again where like RHS, my biggest consumer staples. I just got a little bit of P&G, but RHS is 33 different consumer staples. It's doing fine, And consumer staples is a good place to be on average with inflation because
Yeah.
they can pass it on to people. You know what? If you want to pay $30 a pack, you've got to pay $30 a pack, whatever it is. But here's my question, and I've been wrestling with this for a while. One of the places that look really promising but high risk maybe is Lukoil and Gazprom, especially Gazprom. Now it's probably down a lot because of these, Ukrainian issues. But
Last couple of days, Russian market started
yeah,
to
but now with I don't know, with Ukraine and everything, and they're saying
no,
they,
no, I'm
they
following.
but
Sure.
I'll ask you a question. But the pipeline, I'm guessing, is down because now Nord Stream is threatened. That probably was going to be good for Lukoil and
Right.
Gazprom. But here's the thing: is there a moral issue there? This is my question for you, Sasha. In other words, if I'm investing in Russia or China, which I don't invest in for moral reasons, especially, but if I put money into these countries and or maybe cigarette stocks, whatever, is it like, am I helping Russia? I am helping Russia to a point by inflating their stock price. If they issue more stock,
If Peter, don't kid yourself. By buying shares of Lukoil or Gazprom, you
yeah,
are just buying from another investor. You are the buyer,
right.
and somebody is a
That's true.
seller.
That is
So
true.
it does not affect these companies.
Well,
You're
also,
right, because in the end, the price will go wherever it goes anyway. I see
yeah.
what you're saying.
Also, the thing is, there's a conflict. Like the reason Alibaba's down is the conflict between the government of China and the
Oh,
owners
that's
of
a separate
Alibaba.
issue. Oh, I
Okay,
know.
in other words, it's not like that the shareholders in the company completely align with the government, and that's been a real problem with Alibaba. If there's anything wrong with the stock, it's that
Yeah, all Chinese stocks.
it's
You're trusting China.
yeah, well, exactly.
You
But
see,
see,
Russia, I don't think
yeah,
isn't gonna get rid of Gazprom. I mean,
no. But
it's
the thing is
dependent
that
on. But
the
China, I
government
don't
of
trust at all. I
well,
never
see,
have.
the government of China is saying we don't want runaway billionaires, and Jack Ma
Yeah, of
sitting there
course.
going,
Yeah.
"What am I but a runaway billionaire? Yeah, we don't like you," and they're putting
Mhm.
restrictions on it. So just because you buy a stock doesn't necessarily mean you bought the position of the government, which in that country it could be totally different. Which is, like I said, my problem with Alibaba. I just want some exposure, and it was down. It's a beaten stock. I like to buy the beaten stock. I want some exposure in China without getting
Oh, really?
too creamed. Yeah,
You could do
you know.
probably even better with the stock Neo. It's electric
Oh,
vehicle.
yeah.
It's a
I've
Chinese
seen
company.
Neo.
It went
Yeah,
down quite a
but
bit.
see the problem with Neo and the problem I have with all the heavy industry, there's no way you can scale and really take off any of those things, and that's the problem I have with Tesla. Look, it's labor intensive. So you got labor problems, capital intensive. You have capital problems. Really, really tough to manage. And that's the reason I don't like airlines, even though Peter likes airlines. I
Well,
don't
no,
like.
wait. I
I,
don't
I,
like airlines. I just like Delta
you just
because I
like
think
Delta. I like flying Delta.
well,
Okay.
and a few other airlines, but only because not as a long term invest. Like
Yeah.
not 10 years, but I think there's a huge pent up travel demand, and I
Yeah.
think that
Oh,
they're going
sure.
to be able to
Yeah.
charge
Right. Yeah.
people
Well. Yeah. For
anything
short,
they
short.
want.
for a short term. But see, long-term
next few
holding on
years.
long-term hold on any airline industry, they all go through bankruptcy or they get
Yeah, but I
crushed
did
somewhere
options.
down the road.
I sold
Okay,
options.
Even
well,
Trump
yeah.
Airline went bankrupt. So
Which,
what
which
you
yeah,
see,
Trump
what you
airline went
go, what
bankrupt.
you
I
go
mean,
from average
okay, here's
Back
the
to
problem with
that.
airlines. You're buying into a bankrupt industry someday. You buy into a
Maybe.
pipeline. Okay, you buy into a pipeline.
Oh, I
Like,
know.
come on, you're buying in just a place that pumps money. What's wrong with
Well,
that?
you could argue someday solar and
Someday, but it's
wind,
much longer term
but I don't think
someday.
it's ever going to replace
You know,
gas, natural
Okay, a
gas.
couple of things. I want to tell you something very quickly about Russian companies, Lukoil and Gazprom.
Hmm.
Okay, Lukoil first. Lukoil basically, obviously controlled by Russian government. Even if it's a public company,
Yeah,
don't take it seriously. Of course, it's controlled by Russian government.
right.
Everything now. In oil company is very important is equipment which allows you to get efficient production, get new exploration projects or so on. All this equipment is coming from, guess what, US companies like Schlumberger, Halliburton, and all
right.
that stuff. So guess what now? The sanctions, in any way you look at them, they will forbid selling Russia all this
Yeah,
equipment.
That's
They
crazy.
will cripple, if that's going to be happen
Oh,
as we expect. They will cripple Russia oil industry real big time.
oh, interesting.
And, number two, Gazprom. Okay. Um, I was listening to a Russian talk show on one of these Russian channels, and there is someone by the name Krutichin. He's a big, probably the biggest Russian expert in gas industry, and he had information, some wouldn't call it secret, but probably almost secret papers from Gazprom. It was one of the meetings of management of Gazprom. Remember this pipeline to China that Gazprom built? You know the
Right.
story. You know that they are selling gas almost at cost to China.
Hmm.
So the paper was, and the question on the management meeting was, how much how much time has to come to recoup this investment in the pipeline? When this
Oh,
investment will be recouped? The answer: never.
oh, really?
Okay. So if Gazprom doesn't have this stream, Nord Stream
hmm
2
Nord Stream,
project,
yeah.
it's
Yeah, I
frozen
think so.
now, as we know.
right.
In China, there will be no return on investment forever.
Right.
And what makes you think that Gazprom is such a viable company?
Well, because I just see a high dividend and cash flow to cover it. But
But now
that's
that you said that, Sasha, no.
but it does
And
make me more nervous because
Well,
you're right.
I think
You're
you're
right,
right.
because if they can't get the equipment, if they
Yeah,
can't, but then think of
yeah,
the world's energy situation. Russia is number two or number three, whatever. It's up there depending on the year. We were number one production, but I think they were I don't remember now. OPEC, Russia, U.S. These are the big exporters, the big producers. If Russia goes down because they're not getting the equipment, then my prediction of 150 or $200 barrel,
it's not
okay,
enough.
approximately in a few
I would
years is
agree.
okay,
nothing.
yep.
I would
Then
agree.
maybe we're looking at $300, $400 a barrel. I mean, at some point, people will have to stop driving, but that's going to be crazy to the economy, to inflation, and the Fed isn't going to be able to control this at all. They'll raise rates, but it won't do any good because you can't solve an energy crisis with interest rates, not lack of production. So it's crazy situation, but I think you have to be in energy.
Yeah,
No, I totally agree with you, Peter. And energy stocks, most of them are paying pretty good dividends. So
Yeah.
this is one thing going for them. So if even like buy and hold strategy, that could be not so bad. For example, I own MPLX, I own Enbridge, I own Suncor, which I
yeah,
bought.
I have all those. Yeah,
Yeah, I
I
mean,
do.
I'm ready to hold on to them for the time being.
Yeah.
And the only thing is, I normally if I own stocks, I'm trying to sell at least cover calls to cover it. But in this situation, because as long as they're paying dividends, and hopefully they will continue to pay, I'm not selling covered calls in this situation. I may sell the stock at
No,
one.
don't do that because you could lose the stock.
Absolutely.
Okay.
But it seems to me that this tobacco stocks, I don't smoke cigarettes. I smoke cigars occasionally, but it's just incredible. I'm impressed myself. I'm even more bullish now on the stocks than when I bought them.
Well, they have a loyal following. What can I tell you?
Yeah, it seems to me, well, if you smoke and you smoke Marlboro, you will smoke Marlboro for the next 90 years or whatever time life your expectancy.
Yeah.
You will not switch from.
You have a loyal, consistent following if you're in tobacco stocks.
It's incredible. It's
right.
I even can't think of any other product we're following.
Yeah, all right. I mean, what can I tell you?
Yeah, but there's the consumer staples. I mean, any of them, food and whatever.
Yeah.
People are going to need food. People are going to need, and people need energy.
No,
so
but you see, but the food you may buy at Costco or you may buy at Walmart or you may buy it's this brand or another brand. Now, the Marlboro, you will buy Marlboro wherever you are buying Marlboro.
Right, all of which are in RHS, by the way. I think some tobacco stocks, Costco and Walmart, by the way, are three of their worth. Last I looked, three of their holdings. So it's a nice mix of. Again, this is why it's 9%. It's the easiest thing in the world. I pay Invesco to manage it. So I won't get into the dividend stocks because we're running out of time. I had one, and
so very quickly on options. What we are going to recommend? Is it time to sell puts on Nvidia? You think?
Well, no, I don't. I mean, look. I'm going to cover it again because I covered it last week. It was the biggest find I think I've ever found. Is to me Amazon all the way. I sold 4,500 options and I covered it way down below for 623. But here's my arguments. This is like to me a no-brainer. If I was bold, I would even do more. But it's a very high option and it could be too much leverage. Look, it was 29.76 today. The average price target for the analyst is 42.08. That is a huge jump. It's selling 40% of all the internet sales.
Right.
It's AWS is growing in leaps and bounds, and it's a leader in the cloud. But the other thing, which I said last week, I'll pull it out again, is that in their history, they've only bought their own stock back 5 times. And they just, for the 6th time, bought back their own stock. In all the decades they've been operating, 6 times, they just bought it back. And if you look after 12 months, the average return after each of the buybacks on the average was 100%. And in the 24 months, it was 136%. And the low and the high it wasn't like one big one. The lows and the high were very nice returns. The lowest was 24% for 1 year. The highest was 181 for 2 years. The lowest was 93%. No, 62%. And the highest was 156%, I believe. So, I mean, this is Amazon saying, you know what, we think it's a steal. The analysts are saying 4,200. But you know what, that said, I think it might take time because the market's going through an adjustment. And if inflation keeps coming, the Fed's people are talking every week. You hear more and more predictions, higher and higher. Now 7 rate increases from some people, even some saying more. So the Fed's going to raise and raise and raise interest rates. But the problem is they can't raise it forever because the deficits are huge. And eventually, so they're in a rock and a hard place. But inflation, energy, labor, it's all going to be pulling against even the best companies. But I'm not selling Amazon, and I'll just roll the options over and roll them over because someday Amazon is going to be worth a lot more than 4,500. So that's my call for sure.
I believe that the market already priced in all the rate increases. In energy market is very efficient mechanism, which is much more often right than wrong.
So well, that's true.
Roll on this market. Number 2, Do you know the analyst prediction of Nvidia stock by the end of the year? $400 a share.
Wow.
It's now to.
Oh, so I should ignore that red stuff I'm looking at right now, right?
Just forget about it. I think
I'll forget about it.
It will be 260 in next couple of weeks, maybe 3 weeks.
Right.
So.
So it's
But
like
you said to sell. But you said to sell. You think it'll be a bounce, yeah?
There will be a bounce.
Well, that
And
goes with what I'm
then-
saying, then, Sasha. I'm saying I'm not saying there won't be bounces, but I'm saying in the long run, even for growth tech stocks, they're going to have to outgrow inflation, and they will eventually, because inflation won't. But if inflation starts running at 7% now, it'll be like the 70s for maybe for years and years and years. It's going to take a while for that growth for the market to realize, hey, they're going to outgrow this 7% because they're growing at 20%. Their revenues and whatever, and plus the inflation will ultimately help them in some ways, because then they'll be able to charge more for advertising. The products prices will go up to a point, and maybe they'll make a little bit more spread, but it's just a tough market. It's going to be a tough market if you're not careful.
Agree. So the preservation of capital, this is the most important thing. So if you feel that you're overexposed, even to tech stocks primarily, cut your positions in the next market run. It will probably go higher, maybe 5% or so. Just diminish your position, maybe even sell all of it, because I think that the upcoming crash will be quite severe, unfortunately. And however, the market is still there. It will be here in 3 months, in 6 months, and even in 6 years.
And we'll be back in a week.
As long as you close capital, you'll do okay.
Right.
Thank you very much, everybody, and we'll see you next Wednesday at 1 o'clock. It's a Modern Investing on IBM TV, Pod TV. Bye-bye, everybody.
Bye.